Good morning, everyone, and happy Friday. Welcome to NYSE TV Live. I'm Kristen Scholler. Well, as we round out the first full week of earnings here at the New York Stock Exchange, investors are taking these results in stride. In fact, here above the trading floor, we see the major indexes poised to finish this week higher, notching their sixth straight week of gains. It's the longest win streak on a weekly basis for the major indexes like the Dow and the S&P 500 this year. Of course, it comes amid the Federal Reserve's larger than initially expected interest rate cut in September by 0.5 percentage point. Also helping are a resilient consumer and better than expected third quarter GDP growth. So with that, let's take a look at what is on tap in today's show. After NYSE-listed stock travelers propelled the Dow to a record close yesterday, we will take a look at results from American Express and Procter & Gamble and see how they are impacting the major indexes today. Plus, heading into these colder months, cold and flu season is already underway. A medical expert will join my colleague Trinity Chavez to share her tips on how to stay healthy this season. And have you seen the supermoon this week? It is the largest this year. Our in-house meteorologist is going to share his thoughts and talk about La Nina, which could be here soon. Well, joining me now to finish the trading week is Michelle Schneider, Chief Strategist at MarketGauge.com. Michelle's first time on our show here at NYSE TV Live. Michelle, such a pleasure to have you. Thank you for joining, and let's get right to it, of course, as we round out earnings from these big banks. Where do we stand?
Well, first of all, thank you for having me on. It's great to see you, Kristen. Well, the banks, obviously, let's even go beyond that, because it started out where the expectations for this earnings season was very low. And so already we're beating those expectations, and that's really good news. And also, we're on the third year now of the bull market, which means after 2 years of a bull market, some people think that we're going to sustainable market for a long time to come. And we're seeing very good reasons to be optimistic, the banks being one. But what the banks mean to me is now we have to really look beyond the big banks and into the regional banks. And the regional banks are important for many reasons. The top three would be A, we had that big crash in 2023. There are still stories out there that they're in trouble. They are tied to commercial real estate, which of course is part of the reason why they were in trouble. And now they look like they're starting to come back. And it's also tied to the small caps. And the small caps are so important at this juncture to really keep this rally going as we get through the rest of October and then into election season. So that's been all setting the stage for the soft landing. And now, of course, everything else has to behave, and that's always the rub, isn't it, Kristen?
What's been the turning point, Michelle, for small caps? Has it simply been lower interest rates, the expectation of those, and sustained growth that I think has surprised many to the upside?
Well, definitely interest rates, because the small caps are very interest rate sensitive. And even though the yields have actually gone up since we had the Fed cut, I think the anticipation is that A, the Fed will continue to cut. It's just going to be maybe not quite as aggressive as it was out of the gate. And B, there is an anticipation here that we will reshore in the United States and domestic production will go up, even though the numbers we've seen recently have not necessarily supported that. The market tends to run 6 months ahead, looking ahead now who the next president might be. People are saying that this is an anticipation of a potential Trump victory. I don't know if I'd necessarily buy into that. All I know right now is that it does seem that we are looking to spend more money here to produce production and manufacturing here, which of course is where the small caps fit in.
Interesting. So Michelle, of course, based on what we're seeing and where investments are going to be made, it does lead me to think about the election and from your purview, how a Trump or a Harris administration might impact an investment thesis. Are you planning for different scenarios under different presidents?
Well, I actually would rather look at the commonality than the differences. And it's also really very difficult to know what somebody is saying in a campaign and what the reality would be once they're sitting in the chair. So in terms of the commonalities, I think there are a few that we can really count on. One, obviously, would be defense spending. I don't think either presidential candidate would cut spending in terms of that. I think that there's also, interestingly enough, a lot of buzz about cannabis and legalization. We'll see what happens there, but both candidates have sort of supported it. J.D. Vance more than Trump, but certainly Harris has just come out. Bitcoin and cryptocurrency is another one. But I think we also have to look at the more insidious aspect of both candidates, and that is neither one of them are dealing with the soaring debt or really talking much about saving money. In fact, if anything, spending money. They just like to spend it in different places, the Republicans versus the Democrats. So that's kind of where we have our eyes. So with all this roseate picture, we also have gold making new all-time highs, and people are wondering what cracks is gold actually reflecting. And so I think that's something to keep an eye on as well.
And Michelle, I know over the years that we have spoken, certainly over the past few months, too, gold is something that's been on your radar, and pretty remarkable that it, as a defensive play, is right near a record at the same time that there is such momentum in stocks. And so, to your point there, what cracks might gold be insinuating?
Well, what we just mentioned, which is that a rising debt is unsustainable and it will affect the treasuries. And right now, of course, like I said, the yields have gone up, but today with housing starts, they're coming off a little bit. So that's something to watch, because if the yields come off too much to support the economy, then of course we have the idea of inflation, which of course everybody has dismissed, but I have not completely dismissed. Two would be, of course, the geopolitical situation. I mean, right now we still have a powder keg potential in the Middle East. And three would be the strain on raw materials that we're having with this incredible acceleration of mining centers, data and AI. They consume raw materials. Now, I know the conversation's turned to nuclear, and that's great, but it's not like tomorrow. So meanwhile, we still have copper to be looking at as something that is in rare supply. We have silver to be looking at, aluminum, tin, iron ore. All these raw materials right now are getting stretched. So anything could really basically upset the whole apple cart, and that's why I think you have to be nimble.
Okay, so to that end, Michelle, be nimble, looking at what's happening in the gold market as stocks continue to climb. How would you suggest to investors, your clients that is, that they really round out their portfolio in this scenario heading into year end?
Well, you know, let's step back and look at ETFs. So obviously ETFs have been a tremendous trading vehicle and have really grown in popularity and liquidity. So I like to look at the ETFs that represent the sectors of the US economy. So the top three would be one we discussed, which is small caps, but the other would be transportation and retail. So if we just look at those ETFs and forget so much about stocks, because we could have a whole other conversation about that. If you look at XRT, which is the retail sector, and I like to present this one because it will spell opportunity. It has consumer discretionary and consumer staples. It's been, Kristen, amazingly, in a 10-month trading range of $10. If we put some numbers on it, between 70 and 80. And if it closes out October over 79, that would be the highest closing month in the retail sector. And let's face it, this all comes down to the consumer. Retail sales were strong. We need the consumer to stay confident. So if it gets out over that 80 level, 79, 80, as we get through this month and after the election, I think that tells you that there's a tremendous opportunity, especially in a lot of the areas of the retail stocks that have not performed so well, like in Ulta, for example. So that's something I'm looking at. The other thing I would Oh, I'm sorry.
Michelle, we got to leave it there. We've got some other things to get to, but great to have you, and I look forward to you joining in person one day as well. Michelle Schneider, she's the chief strategist of MarketGauge.com. Michelle, thank you again.
Thank you. Have a great weekend.
All right, well, stay with us, everyone, because up next, we're going to take a look at the media space, specifically the streaming space, what it means for you and your money after Disney up prices on its streaming packages, and Netflix reported results.
So Peter, now tell me, what service does Spire provide, and what's your ultimate mission in space?
Spire was founded 13 years ago with a mission to leverage data from space to improve life on Earth. So we have a massive satellite constellation, the 4th largest in the world, to collect data about all sorts of human and nature's activity and provide it as a subscription to customers, over 700 all across the world.
Now, McKinsey recently said if you don't have a space strategy, you need one. So tell me, what are your thoughts about that statement? And do you think McKinsey is correct?
I do think McKinsey is correct, and they placed an analog to what they said in the 90s about internet strategy, because they recognize that there is an exponential technology that is driving the improvements of the capabilities. Back then it was computers and the internet, and today is space. So I do believe that they are correct. And space is already used every single day by more people than they know of, but that is going to dramatically increase in the future.
Peter, can you talk about the technology behind Spire satellites that can deliver these solutions to its customers?
There are three types of spacecraft or satellites. There are those that look, they basically take reflections from the sunlight. There are those that talk, they're basically transporting data from one spot on Earth via space to another spot. And then there are those that are listening. And that is what Spire does. We use radio frequencies to observe the weather, ships, planes, soil moisture, wind speeds, all sorts of information. And then we analyze it and deliver it to our customers as a subscription.
Now, Spire provides what it calls a space as a service. Elaborate on what this is and who are your customers?
So when you think back to Amazon back in the days, they were selling books and other products, but then they had to develop.
Happy Friday, everyone, and welcome back to NYSE TV Live. I'm Kristen Scholler here in studio. Well, yesterday was busy in the media space. Disney joined Peacock and Max in upping prices on its streaming service, and Netflix reported very strong results. Joining me now with more is David Joyce, Senior Media Analyst at Seaport Research Partners. David, welcome to the show. It's good to see you this morning, and no shortage of things for us to talk to, so let's dive right in here. For consumers, viewers who are watching, what can they expect to pay these days for a streaming service?
It varies by service, and it usually goes up right before your favorite new content or new sequel or movie release is going to come out. But it really does vary, and it varies by bundling opportunities. If you're in the Disney Plus world, the rack rates do seem expensive, but then if you layer on the ESPN Plus and Hulu and even Hulu Live, then you can be getting up to about $100. But if you're even just getting the ad-supported tier on Netflix, that's only $6.99. You do have a few ads then, but it really ranges. But basically, these companies have been raising prices roughly every year for the past few years by $1 or $2.
You mentioned Netflix there, David. I do want to turn to that. That stock, of course, higher pre-market, very volatile. We have seen shares of Netflix in the wake of these earnings reports over the years, but its ad tier actually seen a jump of 34% in terms of subscribers. What was behind that?
That is still part of the process they put in place last year to get people to pay for their sharing instead of all of the password sharing. The reason they came out with an ad tier is to come out with a very low price point that would get people to at least be paying something and still being engaged. And then that sets up a base for them to drive advertising for the long term. So it's a deceleration from the last couple quarters, but it's still off a fairly small base, but it's getting pretty sizable now. We think it's a little over 30 million of their subscribers now are on these ad tiers.
Interesting. So churn, of course, has always been a challenge for some of these streaming services, many of which really came to market after the coronavirus pandemic. Are there certain services, David, that are emerging to you as stickier than others in terms of price point and content?
It seems like Netflix and Disney Plus are the stickiest. Netflix because of its price point and because it has a great array of content and it's got a very easy user interface. Disney Plus has been very sticky, particularly for families with younger children, because a lot of content's on there that they've even been taking off some of their linear channels. So those are the two services that do have the lowest churn, but I think Netflix still wins out on that metric.
Interesting. Well, companies, of course, like Disney, as we've been covering, raising prices. In terms of a resilient consumer, any expectations for how that might impact streaming services heading into the holidays?
It should do very little in terms of churn because there's so much content that people are essentially getting used to and relying on here. It really would be a de minimis loss of customers. But I do still expect the subscribers to grow. For Disney, for example, you'll have Inside Out 2 becoming available on their service, and also they've got the new a new Marvel series is on there. So you definitely want to. I think the consumers will be holding on to their services. They'll grumble, but in the grand scheme of things, if you're paying a $17 a month tier, and you're getting on average, people are using streaming services about 2 hours a day. That's very cheap entertainment.
We've seen linear decelerate. There is so much focus on streaming these days, even though it's been a challenging economic environment in some cases for consumers to pay for these services and for the streaming model to really make sense. Do you see that changing?
We think that there will continue to be a decline in linear subscribers. I don't think it'll be as bad as the 8% losses on average year over year. I think it'll mitigate somewhat. But broadly, there are broad macro reasons why that would happen. Younger consumers who are starting to pay on their own are going to more than likely choose to pay for the streaming services because they can access that on multiple devices. But on the other hand, one of the things that's starting to mitigate the issue is of the linear losses is that these streaming services have increased their prices so much that it's not such an obvious cost savings to leave the pay TV bundle. If you want to get the array of content that you have to buy, Max and Netflix and Disney, it still offers the consumer a lot of choice. But I think that it's on the margin, it might keep the losses on the linear side from getting worse.
David Joyce, great to get your take, of course, heading into the weekend. He's a senior media analyst at Seaport Research Partners. All right, well, stay with us because up next, a doctor is going to join with tips as we head into this cold and flu season. I'll bring in my colleague Trinity Chavez on the other side.
Elastic is an AI-powered search company. So Elastic sits at a very interesting point in the market right now. We sit at kind of the nexus of cybersecurity, data, and artificial intelligence. Cybersecurity has really morphed into a data problem. So now we're a leading provider of threat analytics and cybersecurity. And then in addition to that, everything that's happening right now with generative AI requires a search platform to be able to feed the generative AI model. So we're doing a lot with artificial intelligence.
Tell me how the integration of AI into your business model has really shifted your priorities.
We've recently announced an AI integration capability with our cybersecurity platform that you can put in your unique capabilities in your enterprise or in your agency to identify new threats that are coming in and prioritize threats based on your unique environment.
What would you say sets you apart from your competitors?
The way that Elastic works, we have this capability called data mesh or cross-cluster search, which allows you to embed small Elastic clusters in all of these different environments, whether it's in multiple clouds or on-prem, and just bring back the results that are relevant to a centralized location. Because of our open source roots, everything is open standard. So it integrates, our technology integrates very well with our existing government environments, and we can run it at a very large scale.
How is Elastic navigating through today's cybersecurity challenges in today's economic landscape?
Elastic allows you to search this tremendous amount of data coming in, and now integrating some of these AI tools allows you to find the threats that are most relevant to your environment and remediate those threats quickly and take a lot of that burden off of the security operator. The integration of AI into the security tools is going to help us continue to stay ahead of the bad actors and the emerging threat.
How do you ensure data privacy to your customers?
We have a vector search database that is required to use for generative AI and large language models. So they require a vector search platform. Essentially, we can organize unstructured data to be able to search that data very quickly and provide the relevant information that our customers are looking for. You also want to be able to provide some security controls in terms of role-based access control or even field-level security control in the data.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Well, as the weather changes, it is a good reminder to prepare for these winter months. And joining me now is my colleague, Trinity Chavez, with more on how to stay safe. Trinity, good morning.
Good morning, Kristen. Yeah, that's right. So as we head into cold and flu season, the challenges of fighting viral infections and antibiotic-resistant superbugs are at the top of mind for many. So joining us now to talk more about these issues and how innovative cleaning technologies like CleanCore's aqueous ozone solutions can help. He is Dr. Ian Lipkin, Director of Infection and Immunity at Columbia University's Mailman School of Public Health. Thank you so much for joining us today, Doctor.
My pleasure.
So, you heard it in the lead in, cold and flu season, it's here, right? So what do you think that we should be considering, and what should be the most effective strategies for preventing the spread of viral respiratory infections, especially in densely populated areas such as New York City?
Well, the most important aspect of this is really becoming vaccinated. So vaccinated for SARS-CoV-2, the agent that causes COVID, as well as influenza. This is a great time to get vaccinated for influenza because your protection really begins around 2 to 3 weeks after vaccination, and it'll last through the peak season for influenza exposure.
And superbugs or antibiotic resistant bacteria are a growing concern globally. So given your expertise in pathogen research, and what are some of the key emerging threats, and how should public health policy adapt to address these alongside the seasonal influenza virus?
Well, the most important aspect of this is to understand why we have these superbugs growing as rapidly as they are. And that is the overuse of antibiotics for viral infections and the inappropriate use of these drugs in agriculture to promote growth. And you're right, it's an extraordinary problem, and not purely health related as well, but with relevance for your audience. It has an enormous impact on the GDP.
And how do you think the COVID-19 pandemic influenced our understanding of the transmission and prevention of other respiratory viruses like the flu? And what lessons do you think should be applied as we enter flu season?
COVID really illustrated for us the importance of some of the different controls, like masking, can be very, very helpful, irrespective of what variant is circulating. And the importance, again, of vaccine.
And what do you think the environmental factors such as sanitation and cleaning practices play in controlling the spread of superbugs during high transmission seasons like winter?
They're a huge problem, many of these environmental issues. We have a completely different understanding about how some of these viruses, and chiefly the one that causes COVID, circulate in the air. It can remain suspended and infect people hours after somebody who's infected has been present in an environment. People are beginning to look at ways in which you can measure CO2 as a marker for how many people are in the room and how much they might be exposing one another to viruses. From the vantage point of an individual, the best thing you can do if you see somebody sneezing, coughing, is to either wear a mask or simply get free of them.
Or stay that 6 feet away, as we learned during COVID. But, given your extensive experience in infection diseases, how do you see the role of ozone-based disinfection technologies in reducing pathogen transmission in public spaces?
I think we have the best data right now for ultraviolet light. Ultraviolet light type C has the ability to kill viruses, kill bacteria, and it's not toxic for humans. I don't think we have quite as much experience with ozone.
And with advancements in non-chemical cleaning technology and in efforts to reduce reliance on antibiotics, do you foresee alternative disinfection methods? I know you did mention UV. We don't have a lot of knowledge or experience when it comes to ozone, but what is playing a significant role when you're considering managing both cold and flu and superbug outbreaks?
I think the most important thing is to ensure adequate ventilation. This is one of the reasons why we moved outside to restaurants during the COVID pandemic, is because you dilute the amount of virus and bacteria which might otherwise cause disease. Other than that, other than vaccination, all we really have left is drugs. And the important thing is that if you think you're sick and you can test yourself and find out whether it's COVID or whether it's flu, very important to start the drug therapy as soon as possible. The sooner you start, the better the outcome. But within 48 hours is probably useful.
The sooner you start, the better the outcome. Thank you again, Doctor, for joining us today.
My pleasure. Thank you.
Now I want to bring in my colleague once again, Kristen Scholler. Kristen, Here in the United States, flu season usually occurs in the fall and the winter, as I'm sure you know. But while influenza viruses spread year-round, most of the time flu activity peaks between December and February. So, we're approaching it quite quickly. So some medical experts are saying, as you just heard, to reduce the risk of seasonal flu or other illnesses, either get the flu shot or potentially wear a mask.
I think that's a great insight, Trinity. Of course, for those watching, I've been getting the alerts that it's time for vaccines as well as we head into these winter months. Trinity Chavez joining us in Studio 2. Trinity, thank you so much. All right, well, speaking of health, anywhere large groups of people gather, from universities to stadiums to airplanes and office buildings, of course, these places are facing increased demand for deeper, more frequent cleans, with businesses focusing on maintaining sanitary environments post-COVID. That demand translates into dollars as CleanCore Solutions, which is ringing the bell today, estimates the global service cleaning market will reach $92 billion by 2027. Now, against this growing demand for professional cleaning and disinfecting services, the cleaning industry has found itself facing a labor shortage in this jobs market. As a solution, the sector is looking to add technology. Well, automation, robotic cleaners, and artificial intelligence have now joined squeegees and buckets as the tools of trade. Government regulation and customer preference is also moving the industry toward green cleaning solutions driven by environmental awareness, sustainability efforts, and the desire to use less chemicals. Well, at the center of this is CleanCore Solutions, again, a company leading in the cleaning technology space. It's based in Omaha, Nebraska. Went public in April of this year with the ticker symbol ZONE on NYSE American. Now, this bell ringing comes one day after CleanCore announced a deal to provide its patented technology to NYSE Transportation Holdings. And Clayton Adams, the CEO of CleanCore Solutions, and today's bell ringer, had this to say about the deal. Quote, "Our aqueous ozone cleaning solutions offer a powerful way to reduce carbon footprint and reduce costs while simplifying cleaning processes across facilities. By eliminating the need for harmful chemicals and streamlining sanitation with our innovative technology, we're able to help NYSE enhance operational efficiency and create a healthier environment for both employees and drivers," end quote. All right, well, we are just moments away from the opening bell here at the New York Stock Exchange. We're looking at a mixed market, but of course, NYSE-listed company Travelers propelling the Dow Jones Industrial Average to a record closing high yesterday. And we see gains in stocks like Netflix pre-market after a better than expected earnings report. Comes at a time of mixed results for other NYSE companies, listed companies that is, like Procter & Gamble and American Express. We had seen American Express actually beat on the bottom line, missed on revenue. Procter & Gamble under a little bit of pressure today because of Chinese sales. The outlook, that is, for demand in China in particular. But really the overall storyline here is broader earnings growth, an upgraded third quarter GDP forecast from the Atlanta Fed yesterday that was very crucial to markets, and of course interest rates that are expected to fall. As my guest yesterday said on the show, RSM chief economist Joe Brusuelas, I think the big wild card here is whether the Fed actually slows down when it comes to cutting interest rates and what impact that might have. Of course, other market experts who have joined the show anticipate that over these next 12 months, since the Fed first cut rates in September, we'll continue to see a steady flow of cash coming into the market, leading to more IPOs, leading to more deals. And that's because simply the cost to borrow money, the cost of money is a lot cheaper as interest rates or borrowing costs go down. So these are the main storylines we continue to cover here on NYSE TV Live. Of course, integrating the data that we have at the stock exchange as well. Let's take a listen now as CleanCore Solutions, NYSE listed company, celebrates the bell. All right, everyone. Kristen Schiller here in studio. We are officially off to the races for trade on this Friday, rounding out what is set to be a positive week. And in fact, for the Dow and the S&P, the sixth straight week of gains, its longest weekly winning streak this year. Joining me now to break down what it means for you and your money is Michael Lee. He's the founder of Michael Lee Strategy. Michael, great to have you joining remotely. And as we open for trade and look to round out this week, where do we stand for investors?
Yeah, look, I'm very bullish. I think there's a lot of momentum behind this market. I think when the market started taking off a few weeks ago, a lot of hedge funds were under positioned. There was, this has been a very good year for the markets, close to 50 all-time highs, and so I think there was some positioning, or prior to this last kind of 6-week rally, that was a lot more neutral versus bullish, and so you have a little bit of FOMO and some catching up here, and boom, we are off to the races.
I'm curious, Mike, in terms of the outperformance that you see, we've seen market breadth expanding beyond just some of these high-flying technology names. Where are the sectors that might be able to catch up?
So financials is really doing spectacularly. You have like the big banks, you have the big investment banks, Morgan Stanley, Goldman Sachs hitting absolute all-time new highs. You have the XLF, the technology sector, banging on the door of that. If you look at the regional bank ETF, the KB, I'm blanking on the ticker off the top of my head, but regional banks look spectacular from a technical standpoint. And what I think is going on and with a lot of this market rally and what you're seeing with financials is the Fed. And I think there's still quite a bit of stress in the banking market from this rate hiking cycle that we have just gone through. And now it looks like we're on the other side of, but when you look at where the 30-year mortgage is, relative, like a jumbo mortgage, relative to where the 10-year treasury is, you're at almost a 3% spread. Historically, that spread has been 175 basis points. So that extra 125 basis points to me signifies a lack of shelf space or inventory or balance sheet for these financial institutions to lend money and to bring down more mortgages and sit on their balance sheet. And I think when you look at the Fed cutting 50 basis points, you need to look at that specific trait, that relationship between the 30-year mortgage and the 10-year treasury, because if the Fed cuts 50, 100, 200 basis points, even though inflation might not be at the target, the employment situation doesn't really dissipate much further, and it doesn't seem like they have reasons to. If you can get that long end of the curve back sub 4%, a lot of these long-term bonds that these banks own on their balance sheet that were trading in the 50s, 60s, and 70s will go back to the 70s, 80s, and 90s, freeing up a lot more capital. And so when the banks hold these bonds, they are in their held to maturity portfolio, so they do not realize the losses. However, that affects their collateral. So if something's only worth 65 cents on the dollar, you could probably only get 55 cents of collateral, where if it's worth 80 or 90, you can get a lot more, and it's going to free up a lot more of the log jam that's in the banking environment right now. And with inflation, maybe if you err on the high side and it's close to 3%, I don't know that we need a 5% front end to curb that the way that we did a couple of years ago. So when you have an expanding economy, expanding liquidity, growing earnings, the whole market starts to do well. And I think the story of the last few months has just been this expanding breadth.
Yeah. So the question that I have then next, Michael, is what does this mean for deal activity, IPOs, M&A as we head into 2025?
Yes, so I think this has a lot, like the deal activity slowing down is everybody's looking for an excuse not to do something. And so the excuse right now is the election, and that's going to get resolved one way or another. If you look at the betting markets, historical trends and polls, where the polls have overstated the Democrat candidate by 4 to 6% over the last couple election cycles, and where the Real Clear Politics average where it is now, it's in the poly market and Kashi and kind of the other things that are out there, plus the Republican basket traded by Goldman and by UBS hitting all-time highs, that it looks like the market's thinking that a Trump presidency is going to come in. If that were to happen, I think you're going to see a ton of deal activity next year. I don't necessarily know if a Trump loss will stunt that deal activity, but I feel like the election is the impediment to a lot of deals being announced. And so that is going to resolve itself one way or the other in the next couple months. And so that's a very bullish sentiment behind that. But for those uncertain about the economy, uncertain about the election, uncertain about the world, to me, the safest trade is this AI trade, which is a once-in-a-generation technology transformation that is going to happen no matter what happens elsewhere in the world.
Mm-hmm. Michael Lee, great to get your take. Thank you for joining us here on this Friday morning on NYSE TV Live. We'll be touching base with Michael, of course, in shows ahead. But for our viewers, stay with us because after the break, we are going to take you down to the floor of the New York Stock Exchange. My colleague Trinity Chavez will give us a pulse on the trading floor as we are officially open for trade.
Hello and welcome to today's edition of The Exchange, brought to you by the New York Stock Exchange. I'm live on the floor with Savina Rizova. She is co-CIO and Global Head of Research at Dimensional. Thank you for stopping by.
It's a pleasure.
So we understand you've launched this new UMA service for your advisors. Could you tell us a little bit about it and what the benefits are?
Absolutely. These days, advisors want to both scale and customize. They can customize with SMAs. They can scale with managed models. A UMA gives them the opportunity to both.
So one of the things that's interesting is there's a lot of conversation in our world about ETFs, direct indexing, UMAs, SMAs. How do we sort of distinguish between all of that?
Absolutely. SMAs are typically portfolios of individual securities, stocks or bonds that you hold in one account. Direct indexing is a subset of SMA, which just starts with an index, and then you customize off of that. Our SMAs do not start with an index. They start with a dimensional defined starting strategy. But SMAs generally are used for customizing for specific client needs, tax needs, or ESG preferences. Managed models are models typically of ETFs or mutual funds that allow advisors to scale by assigning many different clients with similar needs to the same custom model they developed. On our UMA platform now, they can do that. They can assign multiple clients to the same asset allocation they put in on the platform, and this allows them to have like a very consistent investment experience offered to different clients.
Are there key benefits? How does this help a dimensional advisor?
Oh, it helps them to gain operational efficiency because they can actually outsource the day-to-day asset allocation, taxes, and a cash flow management to Dimensional, and they can also have Dimensional data.
All right, we are live on the trading floor. I'm Trinity Chavez, of course, and we are off to the races. Right now, it looks like the Dow is slightly down, but we're still finishing the week strong. And as you can see, all the activity around me on the trading floor as the day is playing out. And we have so much more to get to, including an interview with my colleague Judy Shaw. She spoke with Matt Perlberg. He is the president of pharmacy and care delivery at Evernorth Health Services. Let's take a look.
Now, Matt, talk about the specialty services broadly and how Evernorth serves the specialty market.
Absolutely. Evernorth is a leader in the specialty space. A little bit of context. Specialty drugs are those that are used to treat patients with complex conditions like rheumatoid arthritis, MS, or even cancer. Very often these are infused or injectable medications. They'll typically have strict storage and handling requirements. We have some drugs in specialty that need to be infused into a patient 24/7. Even a lapse in treatment of just a few minutes can lead to serious medical consequences. The medications can also be quite costly. There are some specialty drugs that can cost hundreds of thousands or even millions of dollars per patient. And we expect demand for these specialty drugs to increase significantly over the next several years, and that's fueled by a wave of complex drug innovation. I'll give you one data point on that. Last year, over 70% of the drugs that were approved by the FDA were specialty drugs. Now, in the specialty space, we have several different ways at Evernorth that we serve the market. We have our leading specialty pharmacy, Accredo, where we treat over 1 million patients with over 7 million specialty prescriptions annually. We have our specialty distributor, CuraScript, where we serve over 12,000 healthcare providers. And then we have a collaboration with a company called CarePath-Rx that serves over 700 hospitals, health systems, and providers, and provides specialty pharmacy and infusion services on their behalf.
Now, Matt, we know that specialty drugs are expensive for both the healthcare system and for patients. What is Evernorth doing to increase access and affordability to these life-saving medications?
There's a lot that we do, and one example that I would highlight is our focus on the adoption of biosimilars. Biosimilars are clinically equivalent alternatives to branded biologic products. And much like generics, biosimilars create competition, and we can use that competition to help patients and plan sponsors save money on those medications. We expect significant biosimilar growth over the next several years. Just, another data point, by 2030, we expect that about half of the top 25 specialty drugs will face competition from a generic or biosimilar. At Evernorth, we made two very significant announcements in this space recently. We made available earlier this year a biosimilar for the drug Humira at our specialty pharmacy Accredo with no out-of-pocket costs for eligible patients. And we expect that to save those patients about $3,500 per year. We also announced that starting early next year, we will have a biosimilar for Stelara available, again to eligible patients at Accredo with no out-of-pocket cost. And we expect that to save those patients about $4,000 per year.
Matt, why is Evernorth making select biosimilars available for $0 out-of-pocket cost for eligible Accredo patients?
We believe in the power of biosimilars to help patients and plan sponsors save money. We can use our supply chain expertise as well as our clinical expertise to help get those savings, as well as provide high-quality clinical care for those patients. We're already seeing significant interest in the biosimilar for Humira from patients at Accredo. About 25% of eligible patients have chosen that biosimilar already, and we expect that to grow in the coming months and years as patients become more educated and aware of their options.
Now, beyond dispensing the medication, how does Evernorth support patients who are taking biosimilars and other specialty medications?
We have a best-in-class clinical model. At Accredo, we organize patient care by disease state. We have 15 what we call therapeutic resource centers, or TRCs, where our clinical teams, our pharmacists, our nurses, dietitians, social workers specialize by disease. What we can do then is have a deep level of specialization, but deploy those specialists nationwide to help take care of patients across the country. In addition to that, we work with plan sponsors to help secure access to those medications. We work with healthcare providers to coordinate care, and we help secure copay assistance for patients to help them afford their drugs.
Well, Matt, it's been wonderful to have you on Floor Talk. Thanks for joining me today.
Thanks so much for having me.
So, Madhu, tell me, what are your thoughts on the current market conditions in the AI space, and how is Icera positioned to navigate them?
Very good. It's lots happening in the AI space. You saw recently with NVIDIA, Jensen, the CEO of NVIDIA, making announcement, I think, month of March. And last week we were at ServiceNow event. And today, Microsoft with Satya announcing a lot at Microsoft Build on Copilot. The market is evolving so much in Gen AI space. Every month there's something new. And what at Icera we really position is we are the ChatGPT and AI search for enterprise. So the new thing right now, this 2024, is all about AI referring to enterprise, right? How enterprises can use ChatGPT and AI search to do it in a secure way without data leakage, without data being lost, and doing in enterprise data that's behind the firewalls. That's the biggest trend that's happening right now in the AI space.
And what growth have you seen over the last year?
See, for Icera, we've been very fortunate and we're lucky. So it's thanks to all the customers, partners, and employees. We've been growing more than 100% in last 12 months. We have added so many new customers. We are landing multiple large deals. So we are very fortunate to get customers that starting from companies like Cisco, Workday, Gap. We have customers like Gilead, Amgen. So we get so many new customers adding every year, every quarter. The growth has been fantastic.
Now, GPU usage is skyrocketing, leading to more and more energy use every year. How does Icera help combat these issues?
So what ICERA has done is we have done a very interesting architecture. We call this one agentic inference architecture. It's a hierarchical agentic architecture in the sense the way in which we do it is we separated the foundation models, domain-specific LLMs, and task models. Our secret sauce is in the domain-specific LLMs in our hierarchical agentic architecture. By doing that, what happens is for every training and in inferencing, we don't need to always go use that much compute and NVIDIA.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Well, we've all seen that very big, beautiful supermoon of late, even as the temperatures get cooler. And we are lucky enough, in fact, to be joined by ice meteorologist Dave Margolin, who's here to help us get a sense of what might be in store this winter as it approaches, and of course, what it means for our pocketbooks as well. Dave, thank you so much for joining.
Hi, Kristen.
So how is the weather tracking in terms of La Nina and cooler temperatures?
Yeah, sure. So first, what is La Nina, maybe, for our audience? It is a reoccurring climate pattern which occurs over the tropical Central Pacific Oceans, where the oceans oscillate from below normal or colder than normal to warmer than normal. When it's colder than normal, it's a La Nina. And when it's warmer than normal, it's an El Nino. So currently, we are in sort of a neutral. We've been transitioning from El Nino last winter. We're neutral, and the majority of the forecast guidance suggests we are going to move into a La Nina this winter.
Okay, so colder than expected, is that what we should expect?
It depends. It depends. So across the southern and eastern areas of the country, La Ninas tend to skew the temperatures warmer than normal. Across, as the map shows here, and across the northern and northwestern areas of the country, you tend to see a cool skew to the forecast.
Interesting. What are the chances that La Nina could produce extreme weather this autumn and into the winter?
Well, I think the areas to watch are probably from, say, northern or the southern plains up through the Midwest and into the Northeast. Why? Because with La Nina patterns, you tend to get these big blocks that form over the eastern Pacific Ocean, and they produce a lot of cold across Canada and the northern plains. And even in those warmer areas, or the areas that are expected to be warmer than normal for the bulk of the winter, sometimes that cold comes down, like again across the Midwest and Northeast, and it creates a lot of volatility in the weather patterns.
So what is an example of extreme weather that could result from some of this volatility as you described?
I think, you're probably going to be looking at significant snow and ice storms, or at least the potential of those, again, across that key corridor where you see the delineation between those warmer areas to the south and east and the colder areas. So Amarillo, northern Texas, all the way up through the Midwest, thinking St. Louis, Chicago, into the Northeast.
I know many Americans, including myself, have been tuned into the supermoon this week, the largest of the year, in fact. What is the science behind the shape and size of this supermoon?
Right, so if it looks a little bit bigger in the sky, there's a reason for that. It's when the moon's orbit is at the closest to Earth, so us. And so it definitely does look a little bit bigger, and it looks a little bit brighter in the sky. And in terms of effects for humans, probably the main things are, well, in terms of weather, there really isn't any. In terms of the tides, the scientists say you can see tides maybe a couple inches above normal, and probably the main impact is a lot more sightings of werewolves.
Werewolves? You're being serious?
No.
Okay, that was a joke from the meteorologist. I appreciate that as well. Dave, so I'm just curious here. Fortunately, it's not too chilly yet, at least in the Northeast. I know you mentioned there were some signs possibly of snow in Vermont. What else are you monitoring right now in terms of potential weather disruptions?
Well, let's start with tropics, right? Because, Milton is still fresh in our memory. It seems like people in Tampa and that area are just getting back to some normalcy, with electricity now on for the majority of people, schools finally back, and operations basically coming back to normal. So thankfully, when we're in terms of tropics right now, there are two systems we're watching, or disturbances, I should say, in the Atlantic, but fortunately very low risk that they'll impact the United States. And second, when we think more broadly in terms of what might happen for the rest of the year, well, when we look at the frequency of hurricanes in November and December, two takeaways to talk about. One is that we're basically already about 95% through the season. So whatever we see for the next couple months, it should be relatively limited. But in terms of where it goes or where they might track, The main area to watch would be across the eastern Gulf of Mexico and unfortunately over across Florida.
Dave Margolin, our in-house meteorologist. Dave, thank you.
Thank you, Krista.
Stay with us. We'll have much more NYSE TV Live up next.
Our company is designing the most advanced memory and storage controller chips to help solve the bottlenecks for the data pipeline for the AI and the cloud infra. We are building a platform from the chip design to the firmware, software, all the way to the turnkey modules, and helping customer get qualification and deployment in the data center. That really help us to differentiate from the traditional companies that are facing a lot of efficiency and innovation challenges.
And you recently announced a new SSD controller chip, use of a new ARM Cortex R82 cores. It's a new technology in this space. Tell us exactly what this is, what's unique about it, and about the new technology.
We have been focusing on designing most advanced storage and memory controller chip solutions. These technologies are helping solving the bottlenecks for our data pipeline in the data centers, and it's extremely critical for our future growth. The technology we innovate and we adopt will serve that purpose. For example, the technology we just announced on the advanced error correction coding, that will help really significantly improve the reliability of DRAM tier of high capacity, and also help reduce the server downtime. On the other hand, we also partner with industry leading IP vendors like ARM. Their latest R82 core is the greatest and latest embedded CPU, which is great for our next generation controller chip. And it has super great performance, power consumption, and a variety of new features. So that's how we synergize with best-in-class IP and
welcome back to NYSE TV Live, everyone. We are right in the middle of Breast Cancer Awareness Month. Statistics from breastcancer.org show that 1 in 8 women will be diagnosed with this invasive form of the disease at some point in their lifetime. Men, in fact, can be victims too. Estee Lauder has backed the breast cancer campaign for 30 years, and Judy Shaw caught up with Estee Lauder chair William P. Lauder and Elizabeth Hurley, who serves as the global ambassador for this campaign. Here's what they had to say.
It's a treat that we look forward to every year, highlighting the Estee Lauder Company's the breast cancer campaign. It's actually been more than 30 years. Tell me, William, why is this so important?
You know, it's an acknowledgement of the extraordinary effort of all the employees of the Estee Lauder companies in the work that they do in both raising awareness for breast cancer and helping to raise money to fund breast cancer research to help find a cure.
Now, Elizabeth, you became the global ambassador of the campaign in the 1990s. Tell me, how has the campaign evolved?
The campaign has evolved so much since Evelyn Lauder, William's mother, asked me to help her with her campaign. She asked me in '95. She'd very recently set up the Breast Cancer Research Foundation and the Estee Lauder Company's breast cancer campaign. And at that time, I didn't know anything about breast cancer. And she said that was the problem, no one did. And she was determined to change that and determined to have the world talking about breast cancer. So she just co-invented the pink ribbon. And of course now, young people have no idea that there was a time with no pink ribbon, and a time where we didn't wear pink for October, and a time when we weren't raising money for research. But that time was then, and I remember it very well, and William, of course, is going to remember those early days when it was really pioneer work.
William, tell me, what are you most proud of, and how will the campaign continue to drive impact?
First of all, of the commitment that everybody's made to the cause, which is to find a cure for breast cancer. The money that we've been able to raise has enabled us to fund these amazing, brilliant researchers who are all working together to find a cure. And we've made tremendous progress in the 30 years, and now we're at a point where 92% of women diagnosed with stage 1 breast cancer can survive 5 years or more. But there's still the 8% who don't, and there's still a ways to go till we get to 0.
And Elizabeth, finally, tell me, what do you want people to know about advocating for their breast health?
This year, we really realized that so many people now are aware of breast cancer. that campaign has really kicked home and worked. But very often people say, well, what should I be doing? I don't have breast cancer, but what should I be doing? How can I help? So we have this amazing new dedicated site on the Estée Lauder Company's website, where women really can go onto that and really find out about this disease. They can do a risk assessment, they can be taught how to do a self-examination, they can find out all sorts of health advice, exercise advice, lifestyle advice, and that's really something people can do. So we're saying that breast care is self-care right now, and really encouraging women to bring in taking care of their breasts as part of their routine. And people are listening to that, and I really think it's going to make a big difference.
Well, it's been wonderful to talk with you both, and thank you for all that you're doing to help find a cure for breast cancer.
Thank you for having us.
Incredible, of course, to hear from Elizabeth Hurley and William Lauder on a very important topic that really impacts especially all of us ladies. All right, well, it's been a very busy week here at the Stock Exchange, certainly when it comes to markets. And next week we'll have a lot to get to, of course, from earnings to market news. So you want to stay with us. Before we go, though, we'd like to offer our very best wishes and a congratulations to the show's senior producer. Jeff, we are thinking of you. That's Jeff Cohen and his new bride, Danielle. A beautiful NYSE backdrop in the backdrop, it looks like there. And of course, congratulations to Jeff and Danielle. Of course, a great time for them to celebrate. And thank you all for watching here on NYSE TV Live. My colleague Trinity Chavez is down there on the floor of the Stock Exchange, of course, giving us all the action. I'm up here in studio, and we wish Jeff and Danielle the best. Of course, Jeff's going to be back with us in a few weeks. But as we look ahead to what's on tap next week, we'll have more earnings, more economic data to cover, and some very big bell ringers that'll be able to join us live here on NYSE TV Live, including a young scientist. Thank you, everyone, for watching. Have a wonderful weekend, and we'll see you on Monday.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege